The market has been reasonably quiet over the last week or so, to the point that it really hasn't been much worth talking about. I'm Robert, and welcome back, and let's get straight to my lazy trading chart. As we can see from the chart, it has been pretty much quiet. Not much real activity has gone on. We can see that the upper boundary has been reasonably going nowhere, and even the lower boundary hasn't even had any activity at all. The last couple of days really has been the biggest push we've seen in terms of anything actionable. I don't really think it's going to matter much in terms of the overall distance that the market's going to travel, because this range has been pretty consistent since April. It's a good trading range though for the British pound Australian dollar, but it's a slow range, which is good for learning and of course observing the market. It makes for a perfect lazy account, and that has been pretty much exactly what this account has been, lazy. Now we have on the left hand side my current number of positions, and right now my British pound Australian dollar is $32 underwater total. But if I go to the actual trades, and I have a lot here, again, remember your risk assessment. That is absolutely critical when you deal with multiple pairs in the same account. We can see that the current trade on the screen that I am looking at is 34 cents in a profit. Now the green line, of course, is the take profit I have set for this pair. Whether or not it hits it is either a hit or a miss, and we'll find out from there. Overall, my entire account has a leverage effect of 31% right now. So I'm keeping a close watch on everything, seeing how the market goes and adapting as necessary. Always be ready to jump in and turn something off or disable a particular trading strategy if your percentage goes too high. I will actually start looking at that roughly around the 34-35% level if that happens. For the most part though, we can see with my trades that I'm doing pretty good. I am reasonably comfortable with where I am sitting at the moment, and my strategies are fairly consistent with my moving average approaches along with my grid trading. It's a matter of simply waiting, watching, and paying attention. And sometimes you just have to test things to find out if they're working. And you see that here with the British pound Canadian dollar. I had a glitch in the software, so I ran a few tests. Everything's working. Just one of those things. But overall, you look down, you see that the trades are doing reasonably well within the profits. The pound Canadian pulled in 59 cents profit. Of course, the grid bot is still within the 30% profit. But the one point I want to bring out that isn't talked about much. When you trade, you pay a finance charge. Now, there are occasions where that finance charge is actually paid to you based upon what you hold. The rate changes daily based upon whatever it is you're trading. And let's see if we can bring this up to get a closer view. Okay, we can see in the chart that the Euro USD brought in $1.65 in interest. and that I made a certain amount of interest on every single order I held. But if you keep going down, you'll see that the Euro pound made 6 cents, Euro AUD made 4 cents, Euro Canadian cost me 7 cents to hold. Euro New Zealand dollar gave me a penny. Euro US dollar cost me 3 pennies. British pound US dollar cost me 3 pennies. And British pound Australian dollar cost me 22 cents. And we can see going down through the various pairs. Sometimes you get lucky, sometimes you get charged. That's kind of the way it is when you're dealing with this kind of a market. The finance rates change every single day, so it doesn't bother to try to plan one pair from the next. Just stick with what you know and have learned. And that really is the important part of trading. So when you're looking at your finance rates, accept them from what they are. Don't worry about it. Simply go about whatever you're doing. Always pay attention to your margin. Always pay attention to your position sizes in relation to your total account. Now let's get to something a little more interesting. The Euro USD. This is my grid bot. The upper boundary has moved, and it has actually done pretty decent over the last couple of weeks. My last video I talked about this in terms of my equity curve. This is passive. 32 cents per every transaction that it profits. Not very high in terms of the amount of money it makes per position, but it doesn't need to be. It just ticks away on a regular basis, bringing in roughly $30 to $40 a month of profit into the account. It's a pretty straightforward and simple process. And then of course we get to some of my other pairs. Pairs that I use the moving average on. And those pairs would be listed here. As you can see, the number of items line up with what I have in my Oanda account. Like right now, the Australian Canadian, and I am currently in a position. Now this chart shows the DCA combination of the position, but it really is a much bigger process. I have 6 moving averages linked up to this, and if I expand the chart, you can see just how I have different levels of analysis built into this system to help me see and understand what the market is doing. This is more of an algorithmic approach that is meant to be more aggressively profitable than my grid trading strategy. But it is a simple process. I've outlined that within the Jackrabbit support server. Links will be in the description. So from the standpoint of this algorithm though, these 6 moving averages, we can see the ones where trades have taken place. And as we scroll through each of these pairs, we'll get an idea of exactly where this pair is within its trade cycle. We can see, for example, looking at the Australian US dollar, we currently have a total of 12 trade cycles completed, and we are currently in a trade cycle. That's good and well. So let's keep going and see how well this whole process looks. Now these are the pairs I actually look at for my algorithm. And you'll see that every one of what I have displayed in Oanda is here for analysis. Don't be afraid to use multiple tools or even look at different types of analysis for your trading. You'll find overall and realistically that having very simple mechanics works well. And in this case, we see the Euro British pound has actually picked up a second position, which is fine. I'm well within my safety limits of my margin, so I'm not worried about it. I'm not over leveraged at all in my account. And that's the important thing. If you keep your risks low and make sure you never over leverage your account, trading multiple pairs can be quite profitable. Plus, you don't necessarily have to worry about when the trades take place, because sometimes you might be in these trades for a week or more before they finally close out. It's not that big of a deal when you have a fundamental algorithmic system working for you. Even when you use something like the lazy trading approach, you get the context and concept of simply waiting. Now here we see a profit that took place earlier today. The British pound, Canadian dollar, and where I wanted to double check the account. But we see that the account came close to what I wanted, but not close enough. But then it gave me the full amount that I wanted for my take profit. This is common. This is where you just let it ride and let the algorithm do its job. So really, this is an overall basis in terms of trading, a simple approach. It's a quiet approach that just does well, and it simply looks for opportunities based upon those 6 moving averages. Sometimes it will find opportunity, sometimes it just sits and watches the market. The advantage of algorithmic trading over the lazy trading or manual trading technique is it's always looking. Whereas the lazy trading technique, I look once a day and then make a guess on which way I think the market is going to go, if I even want to get into it. Here's another asset that got close enough, and then it actually did break my lower boundary. But that's fine, I don't care. I made what I wanted. I got close enough to what I wanted. I got out of the market. As I demonstrated in my last video, too many times this kind of a situation can often end up where I get close enough and then the market takes off opposite of the position. So this gives me an approach to get out early, get out clean, because I'm past the amount of time I wanted to stay in the market. So for this kind of situation, don't look back. Don't look at it as lost profit, because that kind of mental fear will cripple you in trading, and it will ruin your abilities to profit. Take your profit, be happy, move on to the next trade. And that's exactly what this did. Because not every trade works out that well. And sometimes it can be a real nightmare. So we see some of the trades are just sitting, some of the trades have cashed out, and some pairs have nothing at all going on. That's fine. That's wonderful. That's great. That's just the way it is. Nice, simple, and clean trading approach. Now let's go back to the Oanda dashboard and look at where these positions actually sit in terms of real world market value and money. We can see the positions on the left hand side that actually show what I'm holding and where the total position is at in terms of how far underwater or above water it is. And right now I have a lot of positions in the red. This is the typical state for trading. You're not going to have 100% of the time all of your positions are going to be green. A lot of times you're going to be holding, and if you walk away from the table, you're going to lose money. That's just the way it is. You only go into the green when you get close to profiting. But that's not always the case. And when you look at the total positions, like we see here, you're going to see a lot of red. Get used to it. But if we go to the individual trades, then you'll see that every single trade has a different value. Some of them might even be close or in profit. For example, right now, this Euro GDP position has a 7-cent profit, but the one ahead of it or before it has a negative $9 holding. Now, these are unrealized. I'm still holding these positions. I have not cashed them out. I have not sold them. So, they don't actually affect my balance until I actually sell or close these positions. But this is your typical approach for a multi-position account. You simply wait and leverage and make decisions based upon what you think the market is going to do. For my position and situation, it's just going to let it happen. You can see some of these positions are quite steep in how much I could possibly lose. But again, that is part of the risk. You have to look at the type of trading technique you are using and how well that trading technique is going to function on the basis of your profitability. All of this takes into account when you look at your finance costs, when you look at any fees you pay, so forth. You have to trade specific to your broker, and that means demo accounts. Test, evaluate, find out what happens when you hold overnight, when you hold over a weekend, so forth. Do all of that before you even spend real money. That way you get a clear and concise idea of just exactly what your positions are that you are holding and where those positions are going to take you as you continue trading. So as you can see, there's a lot of stuff here. And software is the only way to actually manage that. And we have another position in the green. Now this is my lazy trading position as I shown earlier. But still, I'm going to let it sit here. I've got a simple take profit. Just going to let it do its thing. So let's go up to a higher time frame and look at the grid. Now we can see, for example, everywhere where my grid is sitting right now for Euro USD. That's quite a few positions. About 53 positions, I believe. And we can see literally how the market went from one boundary to the next in 4 months. That's pretty typical when you see larger trends. Now, will this continue, or has the market reached an exhaustion point? There's no way to know yet, and it's always best just to sit and watch. That's why I look at the daily, and we see on the daily just how chaotic up and down that motion is. It hasn't been a straight line. It's been some buying, some selling, some wins, some losses. But it's all good in the end. Will we break above the current resistance level? I don't know. When we look at the chart and we see and we look back, The more distance we see between the prevailing levels and the upper range, the more unlikely it is we're going to break it. But we can also see the order book in the background, and we can see that most of the orders are below the yellow line or below my upper boundary. So I personally believe the market is going to start trending downwards, and I'm going to start cashing in some of my positions, which is all fine and well and good, because that's what we really want. We want to cash in those positions and make some money. So, and we see here where the market kind of did a zigzag approach before it's reached where it did today. That's pretty much what you can expect out of any market. No market is just going to be a straight line up or a straight line down. And every one of these peaks and valleys is an opportunity to buy and sell, depending upon the strategy, or if you use the strategy like I do, the entire market is an opportunity, because you treat the entire market as a range, looking for when and how that range is going to expand and contract. So hopefully this gives you an idea of exactly what to look for in the market, and not to be stressed out over the markets going in certain directions. It's not a matter of you having to worry about the market. It's really a matter of you planning out so that you don't have to worry about it. And that really is the whole point of demonstrating this kind of trading techniques. Whether it's algorithmic or whether you trade by hand, putting your trading in context to your balance, your risk assessment, gives you a way of seeing the market without risking your account. If you like these kind of videos, please hit that thumbs up and let me know. Leave me a comment. How has your trading been? How has the market been treating you the last week or so? Have you had good trades? Or have you had much like I have, where some trades are just simply sitting there waiting for opportunities? Let me know. Thank you for watching.